Welcome to JK Shah classes for a revision lecture on accounting standards applicable for both IPCC as well as intermediate students. Let's now begin with accounting standard number 16. AS 16, borrowing cost. The points which I am going to take here are the following. Just a brief idea with respect to the points which we are going to discuss here. The scope of the accounting standard, the definition, followed by types of borrowing, then when should I commence capitalization, when should I suspend capitalization, the next cease capitalization, what is to be done if assets are prepared in parts, and the last, the disclosure requirements of accounting standard. Now, these are the points, important points which are important for us for studying borrowing cost, basically 8 points. Let's start with the scope. The first point, nothing but the scope of accounting standard. As far as scope is concerned, it does not apply to imputed cost of owner's equity, including preference share capital. So it is all about borrowings, loan funds. It does not apply to owner's equity, including preference share capital, other than preference shares classified as financial liability. Coming on to the next area, that is its definition. What do you mean by borrowing cost? The second area. Here it is. We have a second area, the definition part. What do you mean by borrowing cost? So I can say borrowing cost is interest cost and other cost. Very much important. When I say other cost, we'll learn it later what is there. Other cost directly attributable for construction, production and acquisition of a, I'll just abbreviate it, QA, that is qualifying asset. Now, the three things which I spoke here was nothing but what is a borrowing cost? Borrowing cost is nothing but interest cost, other cost, directly attributable. Now, what does it mean directly attributable? It means the cost is incurred only because of constructing, producing or acquiring a qualifying asset. So the moment I go for construction, production and acquisition, can I say the standard basically is linking some another accounting standards like AS2, AS10, AS26, 13. This all gets linked to this standard. Of course, as far as 13 is concerned, only investment properties, because what is a qualifying asset, that will give you us an idea. So let's proceed. What do you mean by a qualifying asset? Standard says qualifying asset is an asset which necessarily takes substantial period of time to get ready for its intended use or sale. So qualifying asset is an asset which necessarily means required only, without which this cannot happen, which necessarily takes substantial period of time to get ready for its intended use or sale. That's why I have AS2 also, 10 also, 26 also and 13 also applicable. Now the question arises, what do you mean by substantial period? For this there is an interpretation given by Accounting Standards Committee. That interpretation, of course, now part of our accounting standards as far as Companies Act is concerned. What is a substantial period of time? So it says substantial period of time is generally a period of 12 months. Substantial period of time is generally a period of 12 months. Of course, a period of more or less can also be considered as substantial period of time. Means it is totally subjective, industry based. Each and every industry will have a substantial period. Like constructing a fixed asset in a particular industry may take only 9 months or 7 months, then that 7 months can also be considered as substantial period of time. So if any asset takes substantial period of time to get ready, then that asset is a qualifying asset. Now the most important and vital point for us, okay, we understood what is a substantial period of time, but what is this accounting standard for? What is the purpose of this accounting standard? I can say the objective of this accounting standard. Why was this accounting standard made? The basic objective of this accounting standard is only for two things. When to capitalize borrowing cost and when to expense of borrowing cost. When to capitalize borrowing cost. When to capitalize means add to fixed asset or any other asset. If it is inventory, other asset. And here I'll say charge to profit and loss account. So the main purpose of this accounting standard is to give accounting treatment with respect to the borrowing cost. When should this borrowing cost be capitalized and when should this borrowing cost be expensed off? Expensed off means what? Debited to profit and loss account. Capitalized means what? Added to the cost of that particular asset. But when to add, when to capitalize? Only, it is to be capitalized only if borrowing cost is in relation to a qualifying asset. And when to charge to P&L? Can I say all others? All other area I will charge off to profit and loss account. So if a borrowing cost is incurred, for a qualifying asset, then it will be capitalized. If it is not incurred for a qualifying asset, then it will be expensed off. And what is a qualifying asset? Here it is. A qualifying asset is an asset which necessarily takes substantial period of time to get ready for its intended use and sale. And that substantial period is a period of 12 months. Within this, when I said borrowing cost, I said borrowing cost is interest cost and other cost. What do you mean by other cost? It means component of borrowing cost. Generally we say interest paid is our borrowing cost. Yes, that's true. But the standard not only talks about interest, वो बोलता है interest is borrowing cost, but along with interest there are other things also which are your borrowing cost. Those other things are discount or premium in relation to borrowings. Incidental expenses. Commitment charges. Finance charges in relation to finance lease. And the most important, normally I'm not talking with respect to paragraph, but here I'll say para 4E. Para 1, para 1, 2, 3, 4, and this is 4A, B, C, D, E. Exchange fluctuations to the extent they are regarded as adjustment to borrowing cost. Now, some things very simple to explain. Only one thing I think I need to pay more emphasis on. Discount or premium in relation to borrowing. Now, what I am talking about, discount. You have issued your debentures at discount. So even this discount is your borrowing cost. You are going to redeem your debentures at premium. So the premium amount, the face value of the debenture is 100. On redemption, I am going to give 120. That 20 rupees is our borrowing cost. So discount and premium in relation to borrowing is also borrowing cost. Incidental expenses, like if I go for taking a loan, I have to do some procedures. I have to pay commission to person who arranges for borrowing, or some stamp duty charges, or underwriter's commission in case of bonds and debentures, processing fees which I pay to the bank. These are all incidental expenses. These all are considered as borrowing cost. But the standard makes a very clear point, to the extent amortized. So whatever is the discount on borrowing, the amount of that discount or premium which is getting amortized, that is only borrowing cost for that year. The remaining amount is not borrowing cost. So say for example, I issued debentures for 10 crore at a discount of 1 crore. Out of that 1 crore, the amount which I write off, amortize, in the sense write off to profit and loss account, is referred as borrowing cost. Commitment charges, banks of course would have sanctioned my loan, but pending disbursal, they say, sir, we would charge you something unless until you take disbursal. That is nothing but commitment charges. As far as finance charge in relation to finance lease is concerned, the stuff can be explained when we go for finance lease. Under AS 19 finance lease, there are two types of lease, operating and finance. Under finance lease, we recognize finance charges in the books of lessee. That finance charges are also borrowing cost. More to be learned in AS 19. Yes. Now coming on to this area, exchange fluctuations to the extent they are regarded as borrowing cost. Now I can give you an example that I borrowed $10,000 on 1st of April when $1 was 45. The interest rate is 5%. The same amount can be borrowed in India at the rate of 10%. The same amount can be borrowed in India at the rate of 10%. Okay. So basically what you will think is, okay, we can borrow at 10%, we borrowed from another country at 5%. But what happens is, closing rate is 48. Now what does our accounting standard say? The accounting standard says that this exchange difference which is arising is because of difference in interest rate. When you go for your CA final in SFM, you will study something known as interest rate parity theory. Based on that, it says the difference in exchange rate is because of interest rate, and then we need to find out what is the impact of this interest rate. So what I am going to do is, there is some exchange difference. There is some exchange difference. If you look properly, I borrowed 10,000. When I borrowed it was 45. At the end, this loan will be translated at closing rate. When I translate at closing rate, can I say I have to show the loan in my books at 10,000 into 48? It means I'm going to have an exchange loss of 30,000 rupees. So my exchange loss on translation. What is my exchange loss on translation? My exchange loss on translation is nothing but closing rate minus the recognized rate, that is 3, into 10,000, that is 30,000. Now, basically this is dealt by AS11, but AS11 also has an exception. It says the part which is dealt by AS16 will be dealt by AS16 only. Now, out of this 30,000, I need to do two parts. How much is borrowing cost and how much is foreign exchange fluctuations. Now, how to find out how much is borrowing cost? Very simple. Interest if borrowed in India. What is the interest you would have paid had you borrowed in India? Can I say the same amount? 10,000 into 45, because I would have borrowed 4,50,000 only. So 45 into 10,000, I would have borrowed 4,50,000, and on that I would have paid interest at the rate of in India, say 10%. Of course, for 12 months. So my interest would have been 45,000. I would have paid an interest of 45,000. Now, what is the interest actually paid? What is the interest actually paid by me? So that is nothing but the interest which I have to pay is nothing but on $10,000 into 5%. So $10,000 I have to pay 5%. So $10,000 into 5%. So what I end up paying is nothing but $500. So what I get is nothing but $500. And when I pay, the exchange rate is 48. Here it will be 45, because had I borrowed in India, it would be Indian rupees only. But because I have borrowed in a foreign currency, I have to pay interest in dollars. So it is 48. So $48, 48 rupees per dollar into 500, that is nothing but 24,000. I would have ended up paying 24,000. So what is the interest difference I am getting? The interest difference which I am getting is nothing but 45,000 minus 24,000, that is 21,000. 21,000. Yeah, I'll repeat once again. I borrowed $10,000 on 1st April when it was 45, interest rate was 5%. The same amount can be borrowed in India at 10%. Closing exchange rate is 48. So, exchange loss on translation, 48 minus 45 into 10,000, that is 30,000 rupees is my exchange loss. Huh? Borrowing cost kitna and exchange fluctuation kitna? So standard says exchange fluctuation to the extent they are regarded as adjustment to borrowing cost. So how to find out how much exchange rate has fluctuated because of difference in interest rate? Can I say it is nothing but 21,000. Had I borrowed in India, I would have borrowed $10,000 into 45, means 4,50,000 into 10%, always 45,000 rupees मेरा interest होता था. I borrowed in US, so 10,000 into 5%, that is $500 into 48, I got 24,000. Interest difference is nothing but 21,000. Yeah, so the borrowing cost would be 21,000 and 9,000 will be my exchange fluctuations. Now if some of you would like, sir, what would be your journal entries for recognizing all these things? I will say my journal entries will go in this way. So on 1st of April I borrowed, so I'll say bank account debit to foreign currency loan. The amount being, how much have I borrowed? $10,000 into 45 rupees. That is nothing but 4,50,000. On 31st March, I have to actually pay interest. So I'll say interest account debit to bank. Interest account debit to bank. How much interest will I pay? Actually 24,000. So interest account debit 24,000 to bank 24,000. Then on 31st March, my foreign currency loan, this foreign currency loan is at which rate? So it is nothing but appearing at the rate at which the transaction was done, 45. As per AS 11, we need to show it at closing rate. The closing rate is 48. So my entry would be, I have to increase the foreign currency loan. So I'll say borrowing cost debit 21,000 exchange fluctuations debit 9,000 to foreign currency loan 30,000. Bank account debit 4,50,000 to foreign currency loan 4,50,000. This is my first entry. Interest to bank and borrowing cost account debit, exchange fluctuation debit to foreign currency loan 30,000. Now comes the major point for us, and that is, sir, what is to be done for this borrowing cost? See, this is my borrowing cost and this is my borrowing cost. This both borrowing cost will be capitalized, provided this loan has been taken for a qualifying asset. Provided the loan has been taken for a qualifying asset. Both interest of 24,000 and this exchange difference of 21,000, both of them will be capitalized provided the loan has been taken for a qualifying asset. But if we don't have a qualifying asset, the interest is for other purposes, then both of them, 24,000 and 21,000, will be debited to your profit and loss account and will be shown under the head of finance charges in our statement of profit and loss account. Clear? Now, the solution which I have done, very important point, above solution is based on assumption that para 46/46A of AS 11 has not been applied. Now what is this para 46/46A? When we go for AS 11, we'll be studying, but this is based on that only, that the exchange difference, we were on other cost, exchange difference, this exchange difference, how much exchange difference is borrowing cost? To the extent interest differential, exchange difference is my borrowing cost. So basically, if you look, we were on scope, we completed definition. Now let's come to types of borrowing. Types of borrowing. You can have specific borrowing or you can have general borrowing. Now, what do I mean by specific borrowing and general borrowing? Specific borrowing means exclusively borrowed for a qualifying asset. And just borrowings made without any purposes. Borrowings for general purpose means we don't know where the funds were directly targeted. Yeah, borrowings for general purposes. Like, I'm just giving an idea. There's a qualifying asset of 500. There is a 12% loan of say 500. So what is the borrowing cost? It is exclusive. This is specific only. It is taken for this asset only, specific. So borrowing cost to be capitalized is nothing but 500 into 12%, 60. Just an example. But within this example, if I say that this qualifying asset, instead of 500, it is 450, and there are surplus funds which have been invested by me. I have taken the loan, I got the disbursement, but there are surplus loan amount. 50 lakhs will be used afterwards. Then the borrowing cost to be capitalized will be 500 into 12%, that is 60, minus income from temporary investment. Because this investments have been made, whatever may be income, like say for example the income was 4. So the borrowing cost to be capitalized will be 56. Whatever may be my income from that investment, that will be reduced from my total borrowing cost, and only net borrowing cost will be capitalized or expensed off to profit and loss account. When should I capitalize? Provided this is for a qualifying asset. This is an example for specific borrowing. For specific borrowing, this is an example where two parts, the whole amount is getting utilized for the qualifying asset, or some amount is getting utilized. Some funds are idle. So what do I do with these idle funds? I invest those idle funds, and if I get any returns from those idle funds, the returns would be reduced from your total borrowing cost. Coming on to the next area, there is general borrowing. I'll give you an example for it. Something like this. 12% loan, 400 lakhs, 15% loan, 100 lakhs. I have a qualifying asset of 300, some other asset of 200. Means the total inflow and the total application is same, somewhere or the other. Now, how to determine? I have not taken this loan exclusively for qualifying asset. I said it was just a term loan, public deposits were there. So not targeted loan or a borrowing has been done. I am just going for some public deposits. I accept public deposits. So something like this is there. So 12% loan, 15% loan are there. So which loan went where? How to find out which loan went where? For this purpose, what we have to do is, first find out what is the total borrowing cost. So can I say my total borrowing cost is nothing but 400 into 12% into 12 by 12, because for the whole year we have borrowed, so that is nothing but 48. Same way, 100 into 15% for so my total borrowing cost is 63. Now how much borrowing cost is to be capitalized? So for that I can find out something known as capitalization rate. A weighted average rate is nothing but borrowing cost incurred divided by average loan funds outstanding. So here borrowing cost incurred is 63, and what are my average loan funds outstanding? 400 into 12 by 12 plus 100 into 12 by 12. If I would have borrowed only for 6 months or say 9 months, something like this, then this would have changed. Yeah, so I get the same thing, of course, into 100. So my answer remains same, 63 divided by 500 into 100. So some percent I will get 63 divided by 500 into 100. So I get a weighted average borrowing cost of 12.6%. This is nothing but a weighted average borrowing cost of 12.6%. Kindly look at the example. I had a loan. Two loans are there. Where this loan is, two loans are there. Where this loan is getting reflected, we don't know. This went here or this went here, we don't know. So we say what we will do, we will just go for a weighted average rate. That is nothing but borrowing cost incurred. Borrowing cost means this also includes other cost also, and average loan funds outstanding. If you look properly, what has happened is on 400, I am paying an interest of 12%, so it is nothing but 48. Same way, I am also paying interest on 100 at the rate of 15%, that is nothing but gives me 15 amount. So total borrowing cost is 63. 63 is on 500. Here of course it is 12 by 12, 12 by 12 because the loan was outstanding for the whole 12 months. If the loan was outstanding for 6 months or 7 months, we would have done that appropriately. So here 63 divided by 500, 63 divided by 500, what I get is nothing but 12.6%. Yeah. So this is nothing but my weighted average borrowing cost. Weighted average borrowing cost. Now this is amount which I am going to use, 12.6. So borrowing cost to be capitalized. What will be the borrowing cost to be capitalized? I'll say the borrowing cost to be capitalized will be based on how much expenditure I have done on this asset. The expenditure which I have done on this asset is 300. So it will be 300 into 12.6%. Of course, no information is given when this expenditure was done. We say this expenditure was done right from the beginning of the year. So on this 300, we will have 12.6%. So which comes to how much borrowing cost to be capitalized? It comes to 37.8. Borrowing cost to be capitalized will be 37.8. Therefore, borrowing cost to be expensed off. Borrowing cost to be expensed off is nothing but 63 minus 37.8. 63 minus 37.8. The remaining amount will be expensed off. We'll do it 63 minus 37.8, which gives me 25.2. So the total borrowing cost of 63, two parts. 37.8 will be added to the cost of the asset. 25.2 will be charged to profit and loss account. This will be added. Whom to add? To fixed asset. Which fixed asset to be added? This fixed asset. This qualifying asset to be added. Yeah. But if you are buying any asset which is ready for its use immediately, then it is not a qualifying asset. Then it will come under others. Now let's scroll it. What we were doing, we were on scope, we completed the scope, definition, types of borrowing. Now let's move on to something known as commence capitalization. When should you commence capitalization? The standard says you should commence capitalization when the following 3 points are fulfilled. Commence मतलब start करो. कब से asset में interest add करना चालू करने का. So the standard says commence, start capitalization. Number 1. Expenditure for acquisition, construction, or production of a qualifying asset is being incurred. The first condition, then only capitalization should start. Expenditure for acquisition, construction or production of a qualifying asset is being incurred. Second condition, borrowing costs are being incurred. And third condition, activities to prepare the asset are in progress. Only if all these three conditions are fulfilled, you should start capitalization. Means whatever borrowing cost is getting incurred, that borrowing cost will be added to the cost of the asset. The second area, suspend capitalization. थोड़ा टाइम के लिए उसको बंद करो. Sorry, suspend capitalization. I can just make two parts of what the standard says. If activities to prepare asset are suspended due to normal reasons, and activities to prepare asset are suspended due to abnormal reasons. Now, why suspend capitalization? For some time don't capitalize, suspend that capitalization. So standard is very clear. It says the activities, the third condition which was there here, the activities to prepare this asset, these activities to prepare this asset have been suspended. It may be due to normal reasons. Normal course of activity it is that, sir, suspension is required only. Like heavy rains in Mumbai, you cannot do any kind of construction activity on the outside due to heavy rains for 4 months. So in any case, the activity has to be suspended. So that is nothing but normal reasons. Abnormal reasons means what? There was some accident, there was some mishap on the construction site, some worker died and the activity was halted for say 1 month, 2 months, or some court orders were there to stop the activity for some purpose. We say abnormal reasons. Now what is to be done? If it is normal reasons, standard says continue capitalization. Don't stop for any period. Capitalization should be continued. But here it says discontinue capitalization until the activities are not back in progress. Discontinue capitalization. Moving to the third area, that is nothing but cease. Stop capitalization. कब बंद कर देने का capitalization को? Cease capitalization. So the standard says when the activities to prepare the asset, of course, for what? For use or sale, are substantively are substantially complete, then stop. Minor, substantial, the word uses substantially complete, like minor designing or painting work is left out, but the asset is ready for its use. Some minor work may be going on only to have better look of the asset, or whatever the case may be, you should stop capitalization. It means I have borrowed for a qualifying asset. When the activity was going on, the asset was getting created, or the asset was getting constructed, or the asset was getting produced. During that period, whatever borrowing cost was getting incurred, I was capitalizing it. But thereafter, once the asset is ready, I will stop the capitalization. See, loan is not repaid. Loan is still going on. So henceforth, whatever interest you pay will not be added to the cost of the asset, but will be charged to your profit and loss account. Will not be capitalized, but will be charged to profit and loss account. That is nothing but cease capitalization. This is what we have been learning now. Yeah, the scope, the definition, types of borrowing, commence capitalization, suspend capitalization, cease, stop. Now the second last area, asset is prepared in parts. Of course, this is also linked with cease capitalization. Assets prepared in parts. Now, means I want to install a transformer which transfers a high voltage current into a low voltage current. So I can install a 5 kilowatt transformer. So I have two options. I take up 5 different units, combine it together, 1 kilowatt each unit, combine it together. So what happens? 5 units are getting constructed at the same point of time. So if asset is prepared in parts and afterwards I will assemble all those parts together, what is to be done? The standard says if asset is prepared in parts and the completed part is capable of its intended use independently, then stop capitalization. Of course, with respect to the completed part. If asset is prepared in parts and the completed part is capable of its intended use independently, means that part can become a part of the whole asset also, and that part can be used independently also, then stop capitalization with respect to completed part, which means that if the asset is prepared in parts, मेरे पास 4 part है जिसको मैं join करेगा. If the asset is prepared in parts and that part is not capable of independent use, then continue capitalization with respect to the part which is completed. The last area, disclosures. Of course, accounting policy followed with respect to borrowing cost. And the second area, borrowing cost capitalized during the year. Yeah, so this is the brief idea of our accounting standard number 16. Yeah, quick revision on this. There are only 8 areas: scope, definitions, types of borrowing, commence capitalization, suspend, cease, assets are prepared in parts, and disclosure. Yeah, we'll now proceed towards solving some of the problems on AS 16. We were basically on this question wherein we have incurred an expenditure, so 5 lakhs, 4 lakhs is getting financed from this, and 1 lakh is nothing but our general borrowing. Coming on to this 12 lakhs part, how this 12 lakhs, of course this 12 lakhs expenditure which has been incurred by us, this 12 lakhs expenditure obviously is from general borrowing. So 12 lakhs into 10 by 100, I'm sorry, not 10, it will be 12 by 100. 12 by 100 for 8 months. Why 8 months? Because we have incurred the expenditure in the month of August. Look here, 1st of August, so including August. That is nothing but 96,000. Thereafter, again there is an expenditure of 2 lakhs for a period of 3 months. So 2 lakhs for a period of 3 months. Finance कहाँ से हुआ रहेगा? Obviously general. So 2 lakhs into 12 by 100 into 3 by 12. So 2 lakhs into 12% for 3 months, which gives me 6,000 rupees. So my total borrowing cost, which will be capitalized, is nothing but 40,000 plus 12,000 plus 96,000 plus 6,000, that is 154,000. This will be the borrowing cost which will be capitalized. Here it is. 1,54,000. Amount of borrowing cost to be capitalized will be 1,54,000. Of course, they have just passed an entry for the cost of the plant. That is nothing but 5 lakhs, 12 lakhs, 2 lakhs, 19 lakhs. Total cost of the plant is nothing but 20,54,000. Now, this is just an alternative way of finding out. They have just found out average expenditure. The same way. What I did here was on individual basis. The same thing in this solution is on average basis. This has been done on individual basis. Here the solution is nothing but finding out average expenditure made by me. So it's 1350 and then 1350 minus 4 lakh because specific borrowing was there on that 1,54,000. The final answer remains the same. Okay. We proceed for the next question then. The same. 1st of April, Amazing Construction obtained a loan of 32 crores to be utilized as under construction of a sea link across 2 cities, purchase of equipment, working capital, purchase of vehicle, advance for tools and cranes, purchase of technical know-how, total interest charged by bank. Now just do the total of application. If you look properly, 28, 30, 31 and 32 crores is the application. It's one and the same. Means we can just go for that proportion way of doing it. The source of loan is 32, whereas the application is also 32. You can directly have an answer. This is a qualifying asset, non-qualifying, non-qualifying. Yeah, a non-qualifying asset, non-qualifying asset. So here we'll assume that it is ready. Here we can say it is qualifying asset. Of course, though it was held for a month, it will have no impact because we'll say suspension of work is done due to normal reason, due to high water levels. It is normal reason, it's part of it. Of course, advance for tools and crane is non-qualifying asset. This is also a non-qualifying asset. Yeah. For this, there is an illustration given by module. Somewhere it has been considered as qualifying asset, but our solution goes in this way. Yeah. That is nothing but a paragraph. What is qualifying, what is non-qualifying? Construction of a sea link 6250, that is nothing but the total funds 80 into 25 by 32 proportion. We are just taking 25 by 32 means how much amount has been utilized here, 25 out of 32. Yeah, so this is what it is. We proceed for the next area. Next question. A company capitalizes interest cost for holding investments and adds to the cost of investment every year, thereby understating the interest cost in P&L. Comment on the accounting treatment done by the company in context of the relevant AS. Of course, it is incorrect to capitalize interest cost because investments is not a qualifying asset. They are ready for sale, for use at any given point of time, except the investments are investment properties. So the accounting treatment done by this company is incorrect. This is what our solution also says. Yeah. It cannot be capitalized. And of course, for investment properties, it can be capitalized if properties are our qualifying asset. Messrs. Ayush began construction on a new building on 1st of January 2014. I'm on next question number 51. It obtained rupees 3 lakh specific loan to finance the construction of a building on 1st Jan 2014 at an interest rate of 12%. The company's other outstanding two non-specific loans were 6 lakhs 11%, 11 lakhs 13%. The expenditure that were made on the building project were as follows. January, April, July, December. Building was completed on 31st December. Following the principle prescribed in A16 borrowing cost, calculate the amount of interest to be capitalized and pass journal entry for capitalizing the cost, borrowing in respect of the building. Now if you look properly, you have obtained 3 lakh specific loan, and there are two general borrowing. So when you incur this expense, can I say it is specific only? And thereafter, these loans have been utilized. Now the question arises, which loan would have been utilized? 11% wala ke 13% wala? Of course, we have learned in case of general borrowing, we have to find out capitalization rate. So let's first find out capitalization rate. What would be your capitalization rate? Can I say the interest which I have paid? That is nothing but 6 lakhs into 11%, nothing mentioned. So for 12 months, we can say it is nothing but 66,000 is the interest paid. Same way, for 11 lakh into 13%, of course for 12 months, 11 lakh into 13%, it's nothing but 1,43,000. So this 1,43,000 plus 66,000, I have a total general borrowing cost of 2,09,000. What I can do is, I can find out what is my capitalization rate. That is 2,09,000 divided by the total 11 lakhs into 12 by 12, 6 lakhs into 12 by 12, that is nothing but 17 lakhs. Because everything is for 12 months. So divided by 17 lakh, I get somewhere around approximately 12.29% is my capitalization rate. So how it will go? As far as 3 lakhs is concerned, this 3 lakhs will go at 12% only because it is specific borrowing. 3 lakhs will go at 12%. As far as 350,000 is concerned, 350,000 will be multiplied by 12.29 for a period of 9 months, because from January you have started the work and it is getting completed somewhere in 31st December. So from April to December, 9 months. Similarly, July to December, 6 months, 12.29. 150 also goes at 12.29 for 1 month. So this is how the solution should go. Let's move to the solution part. The specific borrowing, 36,000. Again here, they have done average it out. I can give you an alternative way. Alternatively, my solution will go in this way. Three lakhs will be specific borrowing at 12%. It is 36,000. Then comes 350. I will go for an approximate rate which was 12.29. What, 12%? Which gives me 43,015. Again, I have 5,50,000. Approximate rate 12.29%. For how many months? Can I say it is from July? I'm sorry, I made an error. This error, I'm regretting. $350 is for 9 months. Sorry for the error. This 350 is for 9 months. So my answer would change. 3,50,000 into 12.29% divided by 12 into 9 months, which gives me 32,261. Okay. Now here 5,50,000, that is in July, August, September, October, November, December, 6 months. 5,50,000 into 12.29% for 6 months, which gives me somewhere around approximately 33,798. And the last 150,000. 1,50,000 into 12.29%, which is 1536. You can just add up the total borrowing cost. This is specific, general, general, general. 36,000 plus 32,261 plus 33,798 plus 1536. The amount of borrowing cost which can get capitalized is 1,03,595. This is the solution, 1,03,595. This is just an alternative way of finding out the average expenditure incurred. Yeah, we also have an alternative way. This was nothing but our specific borrowing weighted average cost, capitalization rate. So 1,03,595 is the amount of borrowing cost to be capitalized. Now if you look properly, the actual borrowing cost is 2,09,000. I'm talking about general borrowing cost, that is 2,09,000. Out of 2,09,000, what is getting capitalized is only this much. Look properly. This is specific, specific, specific. This is only getting capitalized. The remaining general borrowing will be charged to your profit and loss account. You may just go through the solution part. We move to the next question. Shan Builders has borrowed US dollar 10 lakh at the beginning of financial year 14-15 for its residential project at LIBOR plus 3%. LIBOR is nothing but London Interbank Offer Rate plus 3%, means whatever is the LIBOR, that too you have to pay plus 3%. The interest is payable at the end of financial year. At the time of availment of exchange rate was 56 per US dollar and the rate on 31st March 15 is 62 per US dollar. If Shah Builders Limited borrowed the loan in India, in Indian rupee equivalent, the pricing of the loan would have been 10.50. Compute borrowing cost and exchange difference for the year ending on 31st March 15 as per applicable accounting standard. LIBOR is 1%. Can I say this basically is nothing but with respect to what we learned, para 4e. If you remember, this is what we did in the earlier part, para 4e, somewhere here. Yeah, this was the point what we learned earlier. We borrowed something. If you can just recall, this is what we did. We'll do it here again. Yeah. Now, interest paid. Of course, what is the interest paid? So interest paid is nothing but $10 lakh into the interest rate 1 plus 3%, that is 4%, into, of course it is 12 by 12 for all the, but you will pay it at 62. So $10 lakh, because you have to pay interest in dollars, $10 lakh into 4% into 62. When you're paying it is 62, so you end up paying somewhere around 24,80,000 is your interest. This is your interest. Now interest if borrowed in India. Now had you borrowed in India, can I say this $10 lakh would have been multiplied by 56 only, because rupees mein borrowing hota tha, into the interest rate which you would have paid is 10.5, of course, for 12 to by 12. So $10 lakh into 56. That is confirmed that I would have borrowed at 56 only. So I would have borrowed somewhere around 10 lakh dollar into 56 multiply by the interest rate, that is 10.5%. So I would have ended up paying 58 lakh 80,000. Now what is the benefit I got? Interest difference. Of course, don't say negative. I have saved on interest. What amount have I saved on interest? 2480 is getting deducted from this. I'm saving on somewhere around 34 lakhs. Now what is my exchange difference? I borrowed 10 lakh dollar at 56, today it is 62. So can I say my exchange difference? My exchange difference is nothing but 6 rupees. So 10 lakh dollar into 6 rupees, 60 lakhs. 60 lakhs is my exchange difference. As per para 4E, this 34 lakhs will be nothing but borrowing cost, and remaining amount from this 60 lakhs, the remaining amount, that is 26 lakhs, will be considered as foreign exchange fluctuations. Yeah, this is what we had done here also. Interest difference. Yeah, when I'm writing here interest difference, please see to it. This is higher. From this I got benefit of 34 lakhs because I borrowed from US. So here your answer is interest for the period actually paid 2480. Increase in liability, nothing but the value of your loan increases. Interest that would have resulted if loan was taken in India, 5880. This is what I did here also, and I bought 5880. So difference, that is 5880 minus 2480, 34 lakhs is nothing but your borrowing cost. 34 lakhs is your borrowing cost. Okay, you can just go through that. Yeah. Now this 34 lakhs, which is my borrowing cost, will be subject to capitalization, provided that loan was for a qualifying asset, and that qualifying asset is in process of getting converted into a final asset, that is a fixed asset or an inventory. Yeah, so this is here we end our questions and answers on borrowing cost. Thank you.